the trifecta of interest rates and inflation and what the Fed's path may look like from here. Good afternoon and happy Thursday. Hope everybody's having a great week so far. We've got a lot to catch up on here this week with consumer sentiment numbers, GDP, home sales, and this is all ahead of a very big week ahead. So we've got a great question of the week here from Jim this week that we will be kind of sharing our thoughts on all the data and all the news coming out here next week. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. So again, we will spend a little less time, to be honest with you, on data this week because there's so much coming up next week that we want to maybe spend a little more time on Jim's question, actually. Before we get to that, though, we did have consumer sentiment numbers come out last Friday. They were higher than expected and honestly, actually the highest it's been in quite some time. So it was good to see this, but I think this rings true with the same theme of, the speculation that the Fed might be cutting rates quicker and sooner than maybe the reality. So it's good to see this, but we'll see how that shapes up here in the coming months and a little bit of a teaser as we look into next week with the Fed meeting as well. We also had GDP numbers come out today. GDP was up 3.3% on the first read, which was a big number, much higher than many expected for sure. But obviously it is a backwards looking number. So kind of keep that in mind too as we talk about the GDP figures. But it was much higher than expected. And so it was a good number to see. We'll see how revisions come out as time goes on. But nonetheless, great first read there. And then lastly, we also had home sales come out today, which were up quite a bit. And so were new mortgage applications. So we have definitely seen a little bit of some movement, I guess, so to speak, in the housing market, which is long overdue. Here in the Pacific Northwest, we haven't really felt the impacts of it nearly as much as the rest of the country. But home sales and mortgage applications have certainly been a tricky spot in the economy over the past year or so. And so certainly seeing some ticks up in that arena. All right, but let's spend most of our time here on the question of the week, because coming up next week, be sure to tune in next Thursday as well. We'll break apart all this. But on Friday, so tomorrow, we have PCE, in other words, inflation and spending data coming out. We also have the Fed press conference on Wednesday, and then we kick off jobs week as well next week. So we have kind of the trifecta of interest rates and inflation and what the Fed's path may look like from here. So what I want to do, as Jim's question, is to break these apart one by one. So first one I want to touch on is PCE, or inflation data. So last month, the PCE numbers came down, and the headline number, which again includes food and energy, was actually down 0.1% last month. Core was up 0.1%, but either way, it was certainly a reduction in the pace of growth. And again, the headline number actually showed a negative figure. So I do expect that we will see a higher number than last month. That was for the month of November. When we get the data tomorrow, it will be for the month of December. Again, I do certainly expect we'll see a higher number. That doesn't mean inflation is all of a sudden reversing course. I just think that, that month of November, we had a lot of downward pressure on certain aspects that may have leveled out a little bit more in December. So don't be surprised if that number is higher than what we saw in November there. If this is the case, do keep in mind that the year-over-year numbers, especially on the headline number, may come back up slightly. Again, it doesn't mean inflation is reversing course. It just means that it's annualized, right? And so it will have a little bit of an impact on that as well. Second thing I want to touch on is the Fed. So the Fed speaks on Wednesday, and I would say the press conference is the biggest thing to watch. They will be making their decision as well as far as rate cuts, leave, or increase. I don't think it's a surprise to share, but our opinion is they're going to leave rates the same as is. But really, the press conference is what is going to be most important to watch, because the Fed has been very clear about their path in 2024 and has stated that they plan to keep rates higher for longer. But the market is suggesting otherwise. The market is really saying that they're going to cut rates quicker, and they're going to cut rates very fast as well, sooner and faster. So I think that especially if we get the PCE data tomorrow, that I'm suggesting that the Fed will kind of hold to their course, and we'll hear a lot of tone from Fed Chair Powell to remind everybody that they do plan to keep rates higher for longer, even though they've shared this in the past as well. I think they might kind of double down on that given how the markets have reacted. The third thing is jobs. So I would suggest that as we get into next week, we are very likely to continue to see strength in the jobs numbers again. This has been one of the kind of core areas that just continues to be resilient. And I think it's likely we'll see the case again next week as well. This is one of the areas we are watching really closely because obviously this affects the consumer as well. But given all these other aspects, this has been one of the very strong parts of the economy. And so it's important to watch this, and certainly could be something that could drop in the future, but I do expect that we'll see another strong number as we get into next week there. So first off, thank you, Jim, for a great question. There's so much coming up next week. This is definitely relevant. And be sure to tune in next Thursday at 3, where we will break apart all this data with the actual numbers. But hopefully this is a helpful kind of glimpse into what to watch in the coming week here. And we will be sure to see you next Thursday at 3 to break this all apart and talk about what we actually see.